Good evening, everybody. Hope I'm not pulling you away from important presidential town hall situations, but I doubt if you'd get any more education from those than you will here. No, you get a lot more here. Okay, we're kind of doing the preamble here on stop losses because this is kind of going to be going into a kind of promoting the fact that we're going to be doing a 2-day training this weekend, and it's going to be based upon the signals and patterns, but now instead of the signals and patterns, that we're going to go from the opposite viewpoint of the signals and patterns in conjunction with the T-line. And hopefully you get a little bit of flavor of this tonight, not only on the PowerPoints, but on our live charts of how effective trend analysis, price analysis, stop losses, entry strategies, all that sort of thing is greatly enhanced by the combination of the two, the T-line and the signals and patterns. So with that, we'll do a quick PowerPoint stuff with kind of the rhetoric of stop losses. Now, stop losses become extremely more effective when you can use the signals not conforming or not confirming and the T-line. So the rhetorical question is, what is the function of a stop loss? Well, most people are going to say that it's protecting your capital from taking big losses or getting you out of positions where they're not going in the right direction that they should be. That's the top analysis or the top reasoning. The second one, which is just as important, is maintaining your mental control. And the reason I say that is, right from my own experience, that if I knew that a price should not be trading back below a certain level, and I didn't already establish a stop loss, whether mentally and or actuality, an order in, when it goes through that level, I haven't finished my trade, because I'm sitting there thinking, oh man, what happens if they just brought it down to this level and I close it out and it turns around and heads back up? I'm now making decisions upon my decisions. So the process of putting in a stop loss is very simple. That with candlestick analysis, based upon the signals and patterns and the setups of the direction of the stochastics, where the stochastics are, and your T-line and your other moving averages, you have an expectation of where the price should move. It shouldn't move back through a certain level. That should already be established before you even put on the trade. Not that you sit there and think about it, but you should be able to visually see where the trade should not move to be moving in the direction of your expectations. Then the third aspect, which isn't quite as important but relevant, is when you stop out of a position, more than likely it's because you should have stopped out. It wasn't doing what it was supposed to be doing. And instead of sitting there contemplating whether maybe I give it a little bit more time, or man, it's moved down far enough that maybe I should wait to see if it's going to bounce back up, you're out of the position. You've got your mental control, and you've got your funds available for your positive thinking, not commiserating on a negative trade or what you should do, Now you're saying, what should I do with those funds to get back into a positive trade? This is that process of cutting your losses short and letting your profits run. Now, because of the nature of candlestick analysis, the fundamental underlying factor of candlestick analysis is it is the graphic depiction of everybody buying and selling, the investor sentiment. That is the most reliable, what do I say, trading indicator in the world, because human nature works the same way time after time. Now, I always got insulted if it hit my stop loss, and I'm thinking, oh man, am I so stupid that I can't figure out a good trade? But when I came to the realization that even if I've got a very good trading program, which I advocate that candlestick analysis is your great trading program, or you can apply the information on a candlestick chart to any trading program that you're already using to greatly enhance the analysis of that trading program. But that if you got 70% of your trades are going to work, that's pretty good. Well, what I always forgot was, what else can you expect? That 30% of your trades are going to be losers. Now, before that sunk into my head, I would take a losing trade personally, thinking, man, there must be something wrong with me that I can't figure out what a good trade is going to be. But once I realized that no matter how good an analyst you are as far as a candlestick analysis or a trader you are, you're still going to make probably 1/3 of your trades aren't going to work. That puts you in a frame of mind that instead of sitting there beating yourself up, you just say, all right, that trade didn't work, let's move on to something else. Now, the Japanese rice traders have provided some very simple rules. If I'm buying, it's based upon the reason for buying. So if I bought on this day, what's my expectation? Then it should be going in this direction. If the next day it opens lower and trades back below not only the open of the previous day's candle, but also below the T-line, what's that tell me about my force? It's not there. The Japanese rice traders have a very simple rule. If you're buying a signal or pattern based upon a signal telling you that the bulls are taking control, if the bears can knock it back down through the halfway point of that candle, who's in control? The bears are in control. And where do you not want to be? Just logically, you don't want to be in a bullish trade where the bears are in control. Close it out. Okay. So every time I'm putting on a trade, I've got, once I'm in that trade, kind of the back of my mind, I've got the rationale of why are you buying? It's because you have expectations of that signal or pattern doing what you think it should be doing. And then after your expectations, you get expectation of what a trade should do, you get confirmations of whether it's doing what you expect it to do. So if I'm looking at a trade and it looks excellent and I'm buying, what don't I want it to do? I don't want it to come back and close below the halfway point of this candle and or the T-line. Now, the one chart that I forgot to, or the one slide that I forgot to put up here is very simple. If you see a candlestick buy signal and a close above the T-line, the probabilities are extremely strong you're in an uptrend. Conversely, if you see a trade and a close below the T-line, the probabilities are extremely strong you're in a downtrend. So if I'm buying something and 2 days later it's closing back below the T-line, I've got one assumption. This trade is not working. Close out the position. If I'm buying something because I've got a nice buy signal, it opens positive, comes all the way up here, I'm just happier than a pig in doo-doo. But if it closes back below the T-line, what's it tell me about my bullish force? It's not there. Close out the position. One of the hardest things that I had to emotionally fight through, and I probably fought through it for a lot longer than teaching other people how to rationally close out a position when it's not working, was I just hated to put on a trade that I knew was supposed to be working, and at the end of the day it's not working. What was my rationale? I'm going to give it one more day to see if what I thought should be working is going to be working, instead of saying this trade is not working, close it out. Because the faster I close out that trade with it closing back below the T-line, and again, the probabilities are that if it closes below the T-line, it's not in a bullish move. It's still in a bearish move. If I'm in a bullish trade, and I know the doji rule, where they open it lower and trade it lower, it tells me right away I have a very simple place to put my stop. If I've got a doji, it should be moving in this direction. It shouldn't be moving back here. This is the logical place to put your stop, because if they are trading with enough strength to take it back down through the bottom of that doji, which also corresponds with the T-line, you shouldn't be in that trade. Ron, I don't know what that means. All right, so every time I put on a trade, it's based on one simple factor. I've got expectations of what that trade should be doing. So if I'm buying a J-hook type pattern on this day and it closes here, now I've got my doji rule. Needs to open positive. If it closes here, I'm stopped out, because it's not doing what my pattern expectations are doing. If I'm in a trade that is moving in the right direction and I bought it up here somewhere, it shouldn't close back below the T-line. Mike, it's on the daily chart. Now, there are times, and this is what we're going to be going over, because of the T-line, and I can even show it right here. The further away you move from the T-line, the higher the probability is going to come back and test it. So I've already got a calculated place to put a stop just in case, right here. Because if it gaps down and goes in this direction back below the open of that candle, what's the logic of that? If you're in an uptrend, they shouldn't be trading back below the open of the previous day's candle. If they do, where do you think the next likely target's going to be? Our T-line rule. Yep. So that's where you have to, and we'll take a look at that with the live charts. The black line is the T-line. Yep. That's the 8 exponential moving average. And the 8 exponential moving average is nothing magical other than the fact that it acts like a natural support and resistance level of human nature. This is the whole basis of our training this weekend, is if we know what the signals are telling us, we can get added confirmation of when to be in and out with high degree of probability in a profitable trade and when to take profits. The little green line is the 3T line, the 3 exponential moving average. It becomes much more functional the further away you move from the T-line. How do you set up stop losses on calls or puts have a mental calculated number. Alan, it's if I am buying calls on this position, it's because I want to own control of this stock. So I use the same criteria. If this is the place that I would be getting out of the stock, that's where I should be closing out my option positions. Oops, hold on. Let me get to all the answers, all the questions here. I trade intraday a lot using the 1-5-15. Okay, I usually get in a good, and put stop slightly below the T line. I keep adjusting my stop as price moves up, but many times I get a big price spike down, hits my stop to the penny, and then continues up. Two things you can do is either maybe you've got your stop too close, number one, or number two, and I've got a few that will illustrate this on the live charts. If you get stopped out and then it reverses and comes back up and continues the pattern or the trade setup, then get back into the trade. If I'm in a position where the trend move or the price move is up 10 points from start to finish, and I only get 7 of those, but every time I'm in the trade, it's moving in the direction that I expect it to, and I'm not holding it in high-risk pullback areas, that's fine with me. The more I can create a correct trade ratio or a better correct trade ratio, the bigger my compounding effect will be. If you buy early after they open and then the stock kept trading lower, would you close it out within an hour or on the close? It depends on your market condition. If the market looks like it's heading up and the stock you're looking at opens positive, but then during the day it either trades below the previous day's open, I close it out there. That's a lot of selling pressure. Or by the end of the day, if it's closing more than halfway down that candle that told me the buyers were in control, you close it out there. How about quick market with 1 minute tick chart? The same principles apply. And the 1 minute, 5 minute, 10 minute is all a function of how fast you want to trade. If you buy early after they open, then the stock kept trading lower. All right, we did that one. How can place stop losses by doing a bracket order? Kenton, that's a lot. Let's do that during our options training night. How do I use the 3T line or the T line as a stop level if the stock has been trading along the 3T line? Remember, you're using the top criteria is your candlestick signals. Then you have to kind of evaluate where those signals are occurring. If you buy calls and cannot closely monitor the position during the market hours, what's the best safety stop strategy? Joseph, a lot of brokerage firms will have what they call a contingency order. You buy a stock, it's trading up, but if it came back down through $50, you want to be out of the trade. And if you've got options, the contingency order is if the stock hits 50, close out my calls. You'll have to check with your brokerage firm to see if they have that type of order. Use my 3 days or my 8 days. Chris, I don't know what that means. What was your answer regarding the 1 minute or tick charts? Allie, you can use whatever you want to. If you're a fast trader, if I'm trading intraday, I'm usually trading off the 10-minute chart because that's slow enough. Now, if I'm getting ready to buy soybeans off the 10-minute chart, because it looks like it's setting up, I'll flip to my 5-minute chart to see if the 5-minute chart is setting up so that it's kind of correlating with the 10-minute chart. And if that's setting up, then I'll flip down to my 1-minute chart to make sure my 1-minute chart is correlating with the other two charts. Not very much. Just happens to be the EMA seems to work well. Roy, very simple rule, and this is what the training session of using the T-line for the different patterns is, where do I put my stop losses? Very simple rule. If you see a fry pan bottom, you can stay long as it doesn't close below the T-line. Okay, let's see, where are we? We're not even halfway through here, and we got to. So when I'm analyzing a situation, I'm analyzing why should I be buying. Usually a signal pattern, then I want entry confirmation, and then where should that price not trade? And that's where you set your stop loss. Now, what's the biggest fear of most people about placing the stop loss? They're going to come down and pick me off and then head back up. That might have been true years ago when the volume wasn't as big. But in this day and age, with that amount of volume being traded out there, if you've got 1,000 shares of a stock at 22 and you put your stop loss at 20 and $28.75, it shouldn't come back down through that level, and the stock normally trades 1 million shares a day, they're not going to go through 140,000 shares to come down and pick you off and then head it back up. If it's coming down to that level, it's because sellers are knocking it down. So the stop loss aspects are very simple. If I'm in an uptrend and I see a doji, where do I not want to see it trade? I don't want to see it trade back below the low of the doji, because what that tell me about what's happening? They're not supporting here at the T-line. So you got a sell signal and more selling. So I always say observe the obvious. That if this is my buy signal, they shouldn't trade back below this level, because what should be happening here? They should be going in this direction. So I don't get myself beat up anymore by myself, because I know that if I put on a trade with expectations, that probably about 1/3 of them aren't going to work. I'd rather close it out and move that money onto something that has a lot more upside potential. So when I look at a trade, I look and say, what should the trend be doing? Why did we analyze where it should be going? Bullish signal, bullish pattern, and where should what should be done with when something alters that trend. So I'm buying because it opened positive and started trading positive, confirming the hammer and the doji and the oversold area. Where am I putting a stop? Well, I might put it right back at where it opened. Because if it came down through there, what color was my candle? Going red again. The bears are in control. Number two, it failed to get up through the T-line. So I'm just picking out logical stops. And if I'm buying, where should it not be trading? You don't look at the direction of the T-line? No. The T-line is the 8 exponential moving average. It's a natural support and resistance level of human nature. I'm buying because I see a buy signal. That's my number one criteria. Then I want to see what it's doing when it gets to the T-line. So the T-line becomes very effective for telling you what's happening in human nature. Cardiff came up, pulled back, stayed above the T-line. Came back up, pulled back, stayed above the T-line. Came up, pulled back. Well, what did it do today? It didn't stay above the T-line. What's that tell me? There's a change of investor sentiment based upon the natural support level. Would have stopped out. Probably would have stopped out when it traded below the low of that doji, because what's our doji rule? The price is usually going to move in the direction of how they open after a doji. So if I'm sitting with a doji right on the T-line, what do I need to see? I better see it open positive. In this example, you should not buy until it closes above the T-line. Which example are we looking for? Oh, the previous one? Maybe if I got energetic and bought because I thought they were coming up, and let's say the market was opening positive, it was kind of doing a bullish flutter kicker signal off of the dojis, and I went aggressive after it, anticipating it was going to close above the T-line. I've got to tell myself it better close above the T-line. If it comes back down through, close it back out. Do you do trailing stocks when stocks go positive, or just follow the T-line? Both. I'll get to some of those here in a second. Let's see if there is one. Okay. As the price goes up daily, nice steady Eddie, do you continually adjust your stop every day regardless of the pattern? Yes. And I'll show you some of those too, Joseph. So here's one. I was buying right here, and now I'm up in the overbought area. I'm setting a stop where it shouldn't trade. Well, in this case, the T-line. So on this day, it would probably be down here, even though that's a pretty fair piece, because right now we got two criteria. One, need to see a sell signal and a close below the T-line. If we're not getting either of those, we assume we're still in an uptrend. Now remember our simple, or the number one criteria, or the number one kind of trading rule that the Japanese rice traders provide for us. If you see a gap up in the overbought condition, what do you start doing? You start looking for profit taking. Nothing serious, nothing serious. That may have been a little bit of a doubtful. If you didn't close out there, it needed to open positive, which it did. Then it closed below the T-line. What's that telling you? Well, now we've got a pretty good observation of what's happening in investor sentiment. They gapped it up in the overbought condition. You can see an obvious resistance level. And then the final nail in the coffin of a uptrend was the close back below the T-line. So look what it did, Morningstar signal. If we started buying here, what was it telling us? A J-hook pattern. But when it closed here, what was it telling us? The probabilities had gone against us. Close it out. Move on to something else. Is Tupperware formula left-right combo? Today it might be. However, now you've got a different evaluation. Right here, we had the potential of a J-hook pattern. Right here, we don't really have anything that's great. It could be starting positive, but you don't have a great pattern set up. Where are you trading 3 SMA criteria, or trading off the T-line? The 3 T-line, unless you're extensively away from the T-line, is just kind of sitting in here. You can also use it that if the 3 T-line comes up through the T-line after a candlestick buy signal, that's that a little bit of added fluffy confirmation that you're probably in an uptrend. But the important factor is, what are the signals telling you? So right now, you could look at this as being a potential buy, but you don't have anything that's telling you there's any great pattern here. Isn't a J-hook pattern toward the end? Well, meaning on this one, not really. A J-hook pattern has a prerequisite of a very strong price move. That's not a real strong price move. That's just a bounce up. Yes. J-hook pattern is wave 1, and we'll get to that here in a minute. Wave 2, wave 3. That was your wave 1, wave 2, wave 3. That I wouldn't call a real wave. How strong is a strong move? You'll be able to see it. You can tell that was a strong move. So it's not something that you calculate or put a number to. You just see whether it was a strong price move. So the reason we want to close out positions when they're not working is so you can take that money and have your mental thought process clear so that you can go on to something else. And because of that simple analysis, you don't have to know formulas, you don't have to know price percentages, you just have common sense visual analysis based upon human nature. And that human nature is based upon the most simple and most consistent indicator in the world. And that's human emotions. And that, remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, which is created by human emotions. So that's what we're going to be doing on the weekend. That's just one element. I think we're probably going to be spending about an hour plus on stop losses. And it's also built into your, we're going to be looking at hundreds and hundreds of charts. So the analysis on each chart is going to be what told us to buy, what did the T-line tell us as far as staying in, when to get out, when to put on a stop loss. That's all going to be a factor of just visually looking at a chart, which you're going to be able to see what to do on an instantaneous basis, meaning it's not like you have to sit there and analyze. So that's stop loss. Now, I know there's a lot of people that have come in recently. Our weekend training is $497 for non-members, but we're doing in combination right now that if you come in and you have that trial, do the trial session for, what is it, a 30-day trial session. While you're doing that trial session, you can get the members price, which is $200 off, so you can save some money that way. That's true, Fabian, yep. These days, most of the big trading is done by algo. But remember, the algo is developed by humans based upon what they think things should do. How do you think candlestick patterns will be valid to probably the next 300, 500 years? Human emotions don't change. And even if they're trading off of the algos, that may be still a very small percentage. Remember, 90% of all investment decisions are probably made based upon fundamental reasons. Somebody likes the stock. Somebody likes Tesla because they don't think it's a car company. They think it's a research company. Carrie, I think we start at 10 Eastern time. They're supposed to be 4-hour sessions, but more than likely they're going to be 6-hour sessions. So usually we go to maybe 4:30 on Saturday, and maybe not quite as long on Sunday because everybody's butt gets sore by then. But one thing that we always try to make our mantra is you're going to get a heck of a lot more information than you expect. Even if you can't sit through the whole thing, or you think you go brain fry every now and then, if you do the session, you also get the recording of the session. So if you doze off while I'm droning on, you can always come back later and see what you missed. can you show some day trading charts to see stops there? Pat, yeah, let me do this. Okay, thank you, Becky. Becky's putting in the links for the session, or if you sign up for the 30-day trial, you're going to get a much better price on the session. That's right. Do you do much? Yeah, I've got an option trading. We've got an option room. Usually have about 35 people in there. The reason we've got the two rooms, we've got the main room where people are trading every day, looking at good charts, and then we got the option room, which we separated because people are talking about different option strategies, or when to put on a spread, how far out to go, what option strategy to put on for specific patterns. But that terminology is a lot different. So instead of confusing people that are just trading stock and looking at those strategies, stock strategies, you can go to the options. And in the options room, we've got Cam that comes in every day, Cam White, who shows what he's trading in the binary option area. If you're trading futures, I trade soybeans, cattle, the dollar, gold, crude oil. If you're trading those, that's all discussed over in the options room. Okay, let's go to some live charts. I think. There we go. All right, so somebody was asking, how do you use the intraday charts? Look what happened today. This is the advantage of the graphics of candlesticks. The NASDAQ traded lower. We knew that there was going to be, this is the Dow, I'm sorry. The Dow traded lower. We knew that there was probably some consolidation because, remember, the further away you move from the T-line, the higher the probability is going to come back and test it. Now, we've got much more clarity as far as seeing whether the pullback is just consolidation or whether it's a full-scale reversal. Look what was happening. Even though the market was down, in this case not very much by the end of the day, we knew that once they were trading back up above the open, creating a green candle, it was pretty much telling us that they weren't selling us off. They was just still in the consolidation stage. The same signals and patterns are the same no matter what time frame, because the definition of a candlestick signal or pattern is that it's the accumulative knowledge of everybody buying and selling during a specific time frame, whether that time frame is 1 minute or 1 month. The information is going to be the exact same. So here's what you could be doing. Now, again, that gap up that far away from the T-line. Let me get more chart on here. That was starting to move a little bit too far away from the T-line. Logic was that it was probably going to come back and test the T-line. We had more clarity on the NASDAQ. Look what happened on the NASDAQ chart. They gapped it up. And the Japanese rice traders say where do most people buy? They buy exuberantly at the top. And if they're gapping up in the overbought area, what do they tell us to do? They tell us to start looking for profit taking. So it came back down. I mean, there was an evening star signal. Where was the next likely target? Probably back down to test the T-line. That told us on this day there was probably going to be some profit taking. Now, how much profit taking? Well, we could see when it opened, it started trading positive. Was it going to continue to trade positive? That's where it opened. Let me make this smaller. So if I was trading the Qs off the 10-minute chart, there's my morning star signal. Yeah, there's close back below the T line, be back out. Oops, they came back up again. I could be buying. Came back out. If I was day trading and I closed out here, I thought maybe they might be bringing it down to this level, but they turn right around, I can always buy back because what's it telling me? I'm back up above the T line. Easy way to figure out how candlesticks open and close. Well, is that a question? Easy way to figure out how candlesticks open and close? Alan, I don't understand the question. You can't tell how it's going to open and close. That's what the signals are. That's what the formations are. If it opens here and closes here, it's going to create a green candle. If it opens here and closes below where it opens, it creates a red candle. Now with indexes above the T line, should we be long hoping for a J hook or wait for confirmation? We still wait for confirmation. Because what did this tell us? The uptrend is likely still in progress because we haven't closed below the T line. Just a very simple analysis. So, Alan, if you were asking that, that is what the signals are. The NASDAQ was down 55 points today. Most people would look at that as the market being bearish today. But we could see that it opened here and closed up here. That told us when they opened, the bulls were there and we're back up above the T line. What's our probabilities? Our probabilities say as long as you close above the T line, the probabilities are you're still in an uptrend. So because of that, it doesn't have to be a strong uptrend. We've got lots of pattern setups. We recommended E and PH today. Well, it didn't. It opened here, came down to the T line. This is one of the most important factors about the T line. Look how it bounced right off the T line. Now, why is that significant? Because nobody has the T line on their charts. They've got the 50-day moving average. There's a 200, the red one, somewhere. And the 34 we have on here. But nobody has the T line on their chart. Very simple analysis. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. If it opened positive, what's our doji rule? The doji rule is the price is usually going to move in the direction of how they open after a doji. If they opened it positive today, which they didn't, that was a function of the market, but if they'd opened it positive, what was the likely candle going to look like? Probably the same as this candle right here. And if they opened it positive and did that type of candle, what did it tell us about our little breakout level? They would have broken out and we would be in a J-hook pattern. Well, it opened lower, so it wouldn't have executed, but look where it closed. It closed right here at the breakout level. So tomorrow, if it opens positive, what's it telling us? This breakout level is not acting as resistance. Look for wave 3. Why do we call this the classic pattern? Because what do we expect coming out of a fry pan bottom? A strong price move. What's the prerequisite for a J-hook pattern? A strong price move. If this opens positive, what type of movement can we expect for wave 3? About the same magnitude as wave 1. In the case of a left-right combo, where I put my stop loss. Roy, which one, that same question on a specific chart, when I tell Jim to do the double line. Do you ever hold more cash over the weekend? No. That is close out some trades you might otherwise open during the week. No. If you're closing out, let's see. Oh, is there a, no, there's the 200. Okay. Yeah, so the reason we have the 50 and the 200 on our charts is not because we're using them for indicators. We're using them because every money manager around the world uses those to make their decisions about their portfolio. We've just got much more clarity of what they're doing, what decisions they are making at those levels. Did you mention that a left-right combo really needs no confirmation? Yes. If I see a left-right combo, the expectation of it moving in that direction is very strong. T-line is the 8 exponential moving average. Does that mean it does not change during the day? No. It'll move during the day based upon the price. Is there any course that I can have for the J-hook pattern with multiple ways if its principle applies on one time frame but not the other? No, they all work. Now, just because you're seeing a J-hook pattern on the daily chart doesn't necessarily mean the 10-minute chart is going to have a J-hook pattern. But J-hook patterns work just as well on a 10-minute chart. Let me find. You can see what's happening here on soybeans. Now, if I was trading soybeans today off my 10-minute chart, you can see here's where I'd be buying. Maybe here's where I'm closing out the trade. Here's where I'm coming back in. And how long do I hold on to this? As long as it didn't close below the T-line. Can members submit what they feel is a positive trade to you for feedback? Kenton, you can do that after I tell Jim to do the double line. We just have people put in a request of what they would like to have analyzed. Or during the day, during the chat room, I'll come in for about an hour, hour and a half around noontime after I put out 2 or 3 stock picks every day in a video format, not so people have stock picks, but they can see what the rationale was for that pick. And then during the day, you're in a room that has, I guess we've got about 200 people in there, but there's people that will put ideas out, and so you can look to see what those ideas are. Or if you have questions, you can ask questions of the other members in the room. And those questions can be, is XYZ a J-hook pattern? Or what's the best brokerage firm to be dealing with? Or has anybody used Thinkorswim? How are they? You can ask questions about regular or common trading questions. Do we do that? Oh, okay. Will answered that. Yep. 8 EMA and the 20 SMA is the difference. Yeah, they're different. This, I think, is the 34 EMA. So the nice thing about candlestick analysis is we know the signals work, or they wouldn't be around for 400 years. We just have to learn how to use them correctly. Now, you can put anything on your chart. If somebody says, oh, put the XYZ indicator on, if you put it on and it's not helping you, take it back off. But if it adds to your probabilities, which I did years ago, one of my first private training students, after he came down from Anchorage, Alaska to spend a weekend in front of the computer screens when I was in Houston, about 6 weeks later he said, hey, take a look at the 8 exponential moving average. It seems to work extremely well. So it's the type of thing you can put on. If it doesn't work, you take it back off. It works extremely well. So well that I tell people, after being the worst investor in the world, when candlesticks came along, I started making good money. Now, good money was a lot of times not losing as much money as I normally did, but I started making money in the markets. Then when I added the T-line, started making great money in the markets. Okay, let's go through some here just to show you why they were bought. Look at our scoop pattern. This is a scoop pattern. How long do you stay in a scoop pattern? until you see a sell signal and a close below the T-line. Or, what was the other alerts? Look how they gapped up in the overbought condition. The next day they did a bearish engulfing. It was time to take profits. Where do you think it was moving back to? The T-line. Look what it did today in a market that wasn't very enthusiastic. Big bullish engulfing. What type of pattern do we have setting up? A J-hook pattern. Why? Because they could never close it below the T-line. DY we put into the YouTube. Look at how easy it is to see when the reversals are occurring. We recommended this one because of the bullish engulfing signal off the 50 in the oversold area, close above the T-line. If it opened positive the next day, what was it telling us? It was confirming our bullish engulfing signal, and it was telling us the T-line was not acting as resistance, and it was telling us this little downtrend has been broken. We were in the next uptrend. When was it time to maybe take some profits? You could up here, but notice what it did today. This is a left-right combo. A doji followed by a bullish engulfing signal. But I'm trying to pay attention, okay. If you ever captured them all for reference. And I don't know what that, all right. So look what's happening. If this opens positive, well, what do you got going on? A J-hook pattern with the confirmation that they couldn't close below the T-line. You could see over here, you had a little slow curve. When was it time to sell? Look at your hanging man. Look how far away you are from the T-line. If it opens lower after a hanging man in the overbought area, what do? You start taking profits. Where do you think the next target's going to be? Back to the T-line. Home, look at your left-right combo right here on the T-line and the 50. Look what it has been doing when the market has been backing off over the past few days. Still staying above the T-line. We recommended Best or Bed Bath & Beyond. There was your fry pan bottom breakout. There was your bullish confirmation. Still moving in a nice direction. So it's not that we're trying to be any great stock pickers. All we're doing is identifying when strength is starting to come into a pattern. You can see kind of the fry pan bottom. Our recommendation on FUV today was based upon if it started trading positive. And remember, it was trading positive this morning when the market was off, whatever, 200 or 300 points. Specialty retail, that could be, yes. And that's another aspect that you can use to put all the stars in alignment. If you can analyze very accurately which way the market is moving, and then you can see which sectors are moving the strongest during that upward market, and you can go to that sector and see which ones have which individual stocks have the best chart patterns. You're basically putting everything in alignment that you're dramatically improving the probabilities of being in a good trade. You personally, I trade both. Bigger money, I trade in the stocks. I've got a small option trading account just to illustrate what trades I'm putting on over in the options room. So here's another one, HIB. Look at our J-hook pattern. So even if you miss this move, right here you could be buying with the anticipation that wave 1 and wave 3 are going to be approximately the same. Where did we start seeing some profit taking? Look how they gapped up a little bit and did some exuberant buying in the overbought condition, and the next day they did a bearish harami. It was time to take profits. Where do you think they were pulling back to? Back to the T-line, which they did today. Now what do you got going on? Well, if they start trading this positive, you've got another J-hook pattern in progress. Try to go through some of these real quick. These are all ones that we have positions on. There was our fry pan bottom breakout right here. Big bearish engulfing signal. where would you have taken profits? Well, if you're in an overbought condition, where's the safest place to put your stop loss? Right here. Because if it opens and comes back down through there in the overbought condition, where's your first target? Back here to the T-line. What's your worst case scenario? It supports at the T-line. You can always buy back on a J-hook pattern. When you refer to wave 1 and 2 and 3, what do you mean? Which one were we referring to? HIB. This is wave 1. And you can see how it pulled back. There's your little wave 2. This is wave 3. And wave 3 is usually going to be the same magnitude as wave 1. Now, is this Elliott wave? No. Because I'm usually just trading, I want this trade. I want to know that this trade is probably the same as this trade. When this trade is over, maybe I'm looking at wave 1, wave 2, maybe starting wave 3 again. Would you have gotten out with profit around October 5th, the big red candle, and then re-enter? Oh, because no. Because what signal is that right there? I'll answer that real quickly. That's not a signal. That's just a down day and an uptrend. What else did it not do? Not only did it not close below the T-line, it couldn't even close below the 3T line. So if they can't even close below the 3T line, that tells you there's still a lot of bullish sentiment. The T-line is the 8 exponential moving average. No, not necessarily. Wave 1 is just kind of a wave. Doesn't mean it's going to be a stronger trajectory. So Lake, I forget where we recommended this one. Oh, not too long ago, because if it trades higher, look where it moved back to today. Right smack dab to the T-line, someplace that nobody else has on their charts. I'm trying to go through these real quick so we can get to some others that left-right combo on Goose. Now, we started buying Goose. Look at your J-hook pattern. We call this a bobble breakout, a more defined J-hook pattern. Because it failed right at the 200, and look where it pulled back to, right back to the T-line. And when it came up, it was doing a J-hook pattern. So basically, if you took out the resistance level of the 200, you have a J-hook pattern. It just happens to be more obvious. Oh, Bobby, I don't. So we buy things that we know have high probability situations. This is called a cradle pattern. There's the headboard, there's the bed, there's the footboard. It can still be bought with the prospect of wave 3 is now, or the next wave is in progress. Chewy, another one coming out of this fry pan bottom, and look what it hasn't been able to do. Opened right on the T-line and traded up. Still in an uptrend. A bobble pattern is just something that you can see much more defined. You can see where the first trend resistance was, and then you can see where it's breaking back out. Oh. So there was a lot today that were iffy. For example, whoops, we recommended LRN because of the breakout. Look at your hammers, gap up through the T-line. What did it do today? It opened and then eventually closed back up above the T-line. Makes our anxiety level very low, because we know as long as it stays above the T line or closes above the T line, you're still in a high probability situation. However, look at this one, apps, which also had a good kind of little scoop breakout. But notice what it did today. Not only did it didn't close below the T line, but it did a strong evening star signal. So even though we owned it, we closed it out. Because what was our probabilities? Our probability was saying you got a strong sell signal, even though it didn't close below the T line, your stochastic's heading down. Why fool with it anymore? That's a strong sell signal. Let's take that money and go find a chart that looks like this. And DQ, same scenario. Now we give this a little bit more leeway because we're not near the T line, but we have a very simple strategy. When we started buying it, look at your little best friend signal, a doji followed by a gap up. What's that imply? A strong uptrend. Now we might be in the profit-taking area. Even though it hasn't closed below the T line, if this opens and trades soggy, where are we as far as probabilities? Probably time to close it out and go find another chart that looks like this. So the benefit we have, what is the difference between a down day and a bearish engulfing candle? A bearish engulfing candle, which one were we looking at? I can't remember which one was the bearish engulfing. Oh, so while we're here, we'll take a look at the biggies. Tesla. Still trading up above the T line. Amazon. Fry pan bottom. Whoops. Fry pan bottom. Pulled back. But notice what it didn't do today. Couldn't close below the T line. Apple. Couldn't close below the T line. So you have to assume it's still in an uptrend. NVIDIA just barely closed above the T line. Makes this very simple. It has to open positive and trade positive. If it opens lower, you close out the position. It means it's not holding the T line. Hold on to each one, Will. There was your left-right combo. Doesn't need confirmation. I would have closed this one out because where do you think it was moving to at least? Right, at least back to the T line. Zoom, we recommended because we can see the slow curve. And what is it telling us? They still haven't closed this one below the T line. Still moving very nicely in our option trades. FedEx, ever since this breakout, slow curve breakout, this is what we call a steady eddy or a 45 degree. How long do you hold on to this? Until you see a sell signal. Zoom is a doji sandwich? No, that's not a doji. That's just using the T line as support. Let's see, we did Tesla and Roku. So this one's gotten a little bit iffy. If you've held on to this one, look at the J-hook pattern that broke you out through this level. Now you're up here in an overbought area with a doji, and this makes the analysis very simple. If it opens lower, it's going to trade lower. It's time to close it out. If it opens positive, it's still holding the T line. You stay long. So the J-hook patterns are things that you can see building up. Now, this one is probably going to be recommended tomorrow for two reasons. First, you've got a J-hook pattern, but what is everybody else watching? What happens when they come up through a resistance level? They'll come back and see if it's going to act as support. Well, we can see that it acted as support immediately because it did a hammer signal and then confirmed and now broke out through this level. So what's this telling us? Everybody that's following this stock, seeing that it's supported, saying, oh, good, it's supported, it's going to go higher. Where, if this is wave one, at least we can factor that this is your next target. Yes, that's a good question. Why would you buy this one? Is there anything in here that telling you that the bulls are in control? New Jersey Mike, hold on to your individual ones until I tell Jim to do the double line. So here's another J-hook pattern supporting right on the T-line. If it opens positive tomorrow, what do we expect? Wave 3 will be in progress. NTRS, look at this J-hook pattern. Came up through the 200, came right back. Look at the doji, bullish left-right combo, J-hook pattern, wave 1, wave 3. So if you're an option trader, knowing which patterns have a high degree of probability of moving in the right direction, this gives you that much added probabilities that your option trades are going to work not only strong, but remember what happens in a pattern. A pattern is usually going to have much more excessive strength. Okay, everybody, hold on to your individual requests until I tell Jim to do the double line. When you see the double line, then you can put in your requests, and we'll do them all. And I'm getting to SRNE here eventually anyways. Sonu. Not a great chart, but you can see they're starting to look where this opened and closed, and they gapped it up. If they open this positive, breaking this level, you're in the next price move. VIPs held up well. You can see the scoop pattern setting up, which means if they bring this up through the 50, which everybody and their brother is watching, coming out of a scoop pattern, what do we expect from a slingshot effect, a strong price move? Where's the next likely target? Coming up here to fill the gap. So anytime we see a scoop pattern, which is basically a flat handle, and then you pull back, we're not buying it because we're looking for a scoop pattern. We're buying it because we see, oh, good strong buying. And there's a flat handle. That gives us the prospect of a big price move breakout. There are many charts bullish, yes. That's the nice thing about candlestick analysis. On any given day, out of the 9,500 trading entities, you're going to be able to find 5, 10, 15, 20 excellent bullish charts. A lot of people say, well, how do you figure out the best? Because now we can analyze which ones have a good pattern. Look at the J-hook pattern setting up on VNet. Now, if this is wave 1 and this is a resistance level, if they break through this resistance level, where do you expect the next move to go to? Or said the other way, if you expect this move to be up here based upon wave 1, what's that tell you about your breakout level? It's not going to act as a breakout level. A best friend signal is a doji followed by a gap up. ALSN. Look what happened. They came right back to test the support level, and now a left-right combo, J-hook pattern, wave 1, wave 3, just a high probability trade setup based upon human nature. ARWR, this is what we call bullish flutter kicker. Notice how they opened here and closed here, gapped up and did a doji. If you use the doji rule, If it opens positive, it's going to trade positive. If it trades positive, you've got a bullish flutter kicker, one of your strongest reversal signals. You use the 200 line only on day, also intraday. Also, this chart could be a 1-minute chart, a 10-minute chart, a 60-minute chart, a daily or a monthly. They all look exactly the same, which means the indicators are fractal, meaning they work just as well on any time frame. So here's Vera, still moving up nicely ever since our morning star signal, then a close above the T line. NIO, everybody in the chat room was watching this one today. That's a best friend signal. Notice the little resistance level, and then notice you have a doji type day, and they gap it up. That's your best friend. Call it a best friend because not only is the probabilities of it heading up extremely strong, but the magnitude of that uptrend is going to be extremely strong. So here's some indicators as far as when you stop out of a position. Right here. If you were going long, because it came back up through the 50, when it gapped down or traded back below the T line, we would close it out. I can go through these pretty quick. We had recommended do till because notice how it kept using the T line as a support. When did it not work? When you put your stop right here, because if these are dojis, it should have been going in this direction. It shouldn't be going in the opposite direction. SRNE. If this is your trend expectation, J-hook pattern, when they gap it down, what's it tell you about your trend analysis? It's not doing what it's supposed to. Close out the position and go find another trade that looks like this. Run. If you're long, where's your stop? Right here at the T line, because logic says if it comes down through there, this series of dojis up here is telling you there's a change of investor sentiment coming. Here's one where you can see the J-hook pattern, everything's supporting. You can see what was happening here today. Let's make this bigger. This is one of those cases where if you were long, you didn't stop out up here, you were holding it, and you stopped out down here, now you look at it and say, all right, if they're back up above the T line, I can always buy back. So you may have missed out on 64 cents, but that 64 cents of getting out and getting back in when it's telling you it's time to get back in, that just acts like insurance that you're not holding on to something that is going to continue a downtrend and you're still hoping that it's going up, which is what I used to do before candlesticks came along. Beyond meat. There's your bearish left-right combo. That's where you close it out because where do you think the next target's going to be? Down here. What do we need to see today to get back into this position? You need to see it probably at least come back up above the T line, which it didn't. So if you'd been long, hoping that it was bouncing back up, you would have closed it out today because it did close below the T line. The strongest indicator is the stochastics that you do not even mention. Well, it's part of the whole, that's just kind of natural. If you're in the overbought condition, stochastics above 80, and you see a sell signal, the Japanese rice traders have very simple common sense. If you see a sell signal in the overbought area, more than likely that's the reversal. The stochastics are slow, and they're 12.33, which is nothing set in stone except somewhere around 30 some odd years ago, I was sitting at my desk saying, all right, 14.55 seems to be too slow for my swing trading. Let's just tweak these to see what numbers come up where the buy is at the bottom and the sell is up here at the top. I tried 14.32, 12.56, and 12.33 just came up. You don't have to use 12.33. It just seems to work very well for me. Abandoned baby, which one are you implying? Beyond Meat? No, it's not an abandoned baby. Abandoned baby is a gap up doji, then a gap back down. No, I thought we were holding off. No, that's not an abandoned baby. If it had gapped down and traded lower, that would have been an abandoned baby. Beyond Meat, the bearish left-right combo took priority over the fact that it not dropped back to the T-line. Correct. Remember, the number one criteria for any of this is the signals. That's why you learn the 12 major signals. And we also know that if you see a left-right combo, it's probably time to take profits. You don't need the bearish confirmation. Some stocks are overbought and stay overbought and go higher and higher. So without a sell signal and the close below the T-line, it doesn't matter what they are. Right. There's going to be a lot of times where you're in an overbought condition for a while, but if you don't see a sell signal, you stay long. So we made good money on VVPR. Now here's one that would have been closed out right here, because up until that point it was an uptrend. But notice what it did on this day. So what is our simple rule of the T-line? The further away you move from the T-line, the higher the probability it's going to come back and test it. So anytime you start seeing things happen big away from the T-line, let me see if I can find this. It probably was on this day right here, yes. It came up, it pulled back, but really didn't close below the T-line. Now you're way up here. Not that far away from the 10-minute chart, but look at what you had. You had an evening star signal. It was time telling you it's time to start taking some profits. If not here, over here, which would have been about the same level. So instead of getting out of this trade back when it was down here, you're now getting out up here. Why? Because your 10-minute chart is telling you there's starting to be some selling. And what was the alert to get out on the 10-minute chart? Because your daily chart showed you were that far away from the T-line. Okay. And they work just as well on the short side as they do on the long side. Let me see if I can find something better description. So there's Groupon. Look at the indecisive trading below the T-line. What's that telling us? They're not coming up above the T-line. If they start selling this off, what do we have? Wave 1, wave 2, wave 3. If they start selling this off, look at your bearish best friend, a doji gap down, right here to the support level, and then today they took it down below that level. If they open this lower tomorrow, what do you got going on? A bearish doji sandwich, probably the same magnitude as that candle. What's that tell you about this support area? It's not acting as support. You probably got a wave 1, wave 2, going into wave 3. So all this is done predicated on where are your signals occurring and where is the T-line. Very simple. You can stay short as long as you don't see a buy signal and a close back up above the T-line. You can stay long as long as you see a buy signal and it doesn't close below the T-line. So this is what gets rid of emotions. I'm guessing that a good percentage of the people in here, if they've got a good profit, say, man, I got a good profit. I'd hate to give some of this back. I'm going to close it out. Remember, you're supposed to let your profits run, cut your losses short. Everybody says you can't go broke taking a profit. You can if you're cutting your profits short. Want to maximize your profitability. How does shorting the stock work? It says, remember, there's a process. You're buying low, selling high. You don't have to do it in that order. You can be selling high and buying back low. That means you're selling stock, and shorting means you're selling stock that you might not have, so the brokerage firm is lending you the stock to sell to somebody else, and when you cover it, you're buying stock from somebody else, and then the brokerage firm gives it back to the people you borrowed it from. Why would you short an uptrend? No, you wouldn't short an uptrend. Which I didn't say you were shorting an uptrend, did I? Saying you short this one because you're wave 1, wave 2, going into wave 3. Can you short Bitcoin? I'm sure you can. I just don't trade those. In an options trade, any general theory about rolling up? Yes. If you think a price is continuing to move, but you're getting close to expiration on your current trade, but you think there's still more upside and you don't want to play with a time factor, you start rolling out of your ones that you're in and rolling into something that's maybe further out. Okay, so you can see what's happening right now in the futures. They're up. Dow futures up 59. So if they trade this positive, giving you a morning star signal, that's a pretty good indication that your uptrend is still in progress. Buy short. Don't know what that means. Okay, any general questions? Becky, you want to put the link in? If you know your candlestick signals, you don't, and even if I tell people that if you're still not familiar with all the candlestick signals and patterns, this is still a training session you want to go to because it's going to make you more incentivized to learn the signals and patterns. If you can learn the signals and patterns and how they work extremely effectively with the T-line, what it basically does is it gives you a whole different perspective on when you buy and when you sell, not based upon fundamental reasons or somebody's recommendation. You're going to be able to analyze yourself which way a price move is going. Do you have a preferred candlestick duration for day trading a stock? John, I very rarely trade stocks, but that's up to each individual. If you're trading something like Apple, the first chart I go to is my 10-minute chart. If my 10-minute chart is showing I'm starting to get some buying, then I'll flip to my 5-minute chart and see if there's a signal there. And then really ready to enter a trade, I'll go to the 1-minute chart to make sure the 5-minute and 10-minute are still working. So it all depends on each individual's trading style. If you want to trade fairly quick, you might use a 1-minute and 5-minute combination. If you're trading a little bit slower, maybe a 5-minute, 10-minute combinations. Stochastics down, sell. Chris, you still have to go based upon the candlestick signals. Can you please elaborate on pointing to the specific candle on the start of a J-hook pattern? No, there is not a specific candle. You can see how the trajectory changed. You can see how right here it was telling us Oh, they might be going into a J-hook pattern because we can see how this little hook is setting up. This one confirmed it. So there's two places you could be buying. One, maybe buying on this candle with the anticipation they're heading up, or two, buying right at that level as it's breaking out. What were the other ones? That's not it. NTRS. That's a J-hook pattern that I probably wouldn't have recognized why it was setting up. But if it opens positive, what do I have? Wave 1, wave 2, wave 3. Similar to J-hook, wave 3 resembles wave 1. Is there a similar projection for a fry pan bottom breakout? No. A fry pan bottom breakout is you stay long as it stays above the T line, and you see a sell signal. And so there's no, some of them are going to break out where you're up 400%. Some of them may break out to where you're only up 15%. It's when you see the breakout is occurring, you just have to now wait to see the sell signal. Okay, any other general questions? If I understand the stop setting, it is individual to the trade target. Also, why to buy? Yes. So some people say, well, I've been told that you're supposed to stop if you have a 3% loss, 5% loss, 7% loss. The answer to that is the market doesn't give a hoot where you bought. What we're looking at is when has there been a change of investor sentiment. On some of them, if I was buying here and my stop was right here, the halfway point of this candle, that might be a 7% loss. Others, it might be a 2% loss. Other charts, it might be a 13% loss. It's not what the percentage is. It's where the investors are showing us that there's been a change of investor sentiment. Okay, so I guess with that, Jim, go ahead and do the double line. Try to keep it to 1 so we can get out of here reading. And Jim, do the next double line. I'll try to do these quick. The more Home Depot, you stay long as it stays above the T line. American Express, that's never been a very good trading stock. It looks like it's in a wedge. I probably wouldn't be long or short this one unless it breaks out through this level. And that one, I probably wouldn't be long or short. There's no direction to it. Nugget, nothing there yet because gold prices are having a more of a sideways move. I wouldn't be trading the golds right now just because there's no direction to gold. This one, I'd be more apt to go short, but your first target is right here at the 50-day moving average. The NASDAQ, Hughes, I don't know why it's not showing up. Is it? I don't know why the NASDAQ futures are not coming up right now. Snap, you could buy this one. It wouldn't be my best buy because you've already had a good uptrend. Make these a little bit smaller. But you could be buying it as long as it stays above the T line. Nikola, nothing. Would not be long or short. There's nothing there. BSH, that's a J-hook pattern bouncing right off the T line. I'd be a buyer if it trades positive tomorrow. LTRX, nothing wildly exciting, but you have bounced off the 50 twice. If you're long, you can stay long. It's just not a very exciting looking stock. I've experienced great success using the 1233, okay, in combination. All right. Yeah, and nothing's set in stone. If you've got something that works better, add it. Right now, we're just giving you a framework of what works. You can always tweak it if you like something better. CrowdStrike. If I had been long, let's see, I can't see where this, it closed up. So it's closed right here at the T line, which means it has to open positive to stay in it if you're long. If it opens lower tomorrow, close it out. Means you're still below the T line. Work, another one where you're seeing a doji, spinning top, it has to trade positive. I'd use today open as a stop. I wouldn't want to see it come back down through that level. What's happening here? Just not doing right. AVYA. J-hook pattern. Be ready to buy this one on positive trading tomorrow. Is this considered a bullish engulfing? It is, but it's, yes, it's a bullish engulfing. Obviously, you want to see a buy signal in the oversold area, except if it's setting up a pattern, it's telling you, and especially off the T line, that your next pattern setup, which is the J-hook, is starting on bullish confirmation. Cisco, nothing wildly exciting here. If you're long, you can stay long, but it needs to stay above the T line. Another prospective J-hook pattern, yes. So what you can calculate is that if this is wave 1, wave 3 is going to be probably even taking you out through this resistance level. Eight. This is setting up for a bobble breakout, meaning they failed at the 200. They've pulled back. If they come back up through the 200, that's your bobble breakout J-hook pattern. You can be buying it then. If you're long, you can stay long right now. XLE, another one that's just barely staying above the T line. Don't let it close back below the T line. U, is that a symbol? That one, there's not enough information there to make an evaluation, David. That's got the prospects of a J-hook pattern if it opens positive. Gold, flat. Silver, relatively flat. Let's see, it opened, yeah, so it closed right on the T line, but you can see it's not a very strong pattern. Nail, you could buy it. It's not the best place. You're in the overbought area. It's still in an uptrend. You've broken out through this level. So you are in wave 3, which wave 3 could have the same magnitude as wave 1. So you could be buying it. It just wouldn't be the best place in the world to be buying it. And AutoZone, not a great chart either. But if it opens positive, kind of a bobble breakout, you stay long. Wouldn't be the best chart to go after. This one with the breakout, you expect a 45-degree off of here. If I was buying on positive trading, I'd have my safety stop at today's open. Yes, oops, you're ahead of me, MP. That was a 45-degree analysis. And band, you just stay long as it stays above the T line. Zoom, considered a 5-pin bottom or just a choppy uptrend. You got the prospects or the perception of a fry-pan bottom. You just stay long as it stays above the T line. J-hook pattern setting up on the container store. Wave 1, wave 2, wave 3. Wave 1, wave 2, going into wave 3. Now, the J-hook patterns are very indicative that there isn't exuberance. They take it up, profit taking. Take it up, profit taking. That makes for a much more solid trend. Can you set a stop loss at T-line automatically as a stop? I don't know whether you can do it automatically, but you could see where it is and set it there. You stay long on Kendai as long as it stays above the T-line. It has to open positive tomorrow to keep this fry pan bottom in place. And pause. It needed to open positive today. If you stayed long, you're still just barely above the T-line, but it has to get up through the 50. Otherwise, it's gone flat. And tech, nothing. Wouldn't be long or short. This is a typical one where once they go up like this, look at your kicker signal. This was the area that told you the bulls are in control, the bears came in. Now the bulls and the bears are fighting, which usually creates a flat trading for a good while after that, which means they might drift it, waiting for the 50 to catch up. Then you see about buying back in. AMSC, you just stay long as it stays above the T-line. I wouldn't buy it now. I'd be looking at something that looks more like that. I would be holding this one if I was in it. This one you could buy because of the J-hook pattern. Newmont, nothing of any great consequence here. Again, the gold stock that's kind of moved sideways. And same scenario here. I probably wouldn't be long or short. Let's see. I do know of a good, I think it was this one. Nope. It was a GFI. This one was your best friend signal that started this move. So here's your very simple analysis. You see a best friend signal. There's your doji gap up off the 50 through the T-line, breaking this level. How long did you stay long? Until you saw a gap up in the overbought condition. That's your exuberant buying. That's when you start looking to take profits. I can't read what you wrote there, Jim. AUDC, nothing. Another one. Big spike up, pulled back. You're probably going to trade flat until you see a very strong buy signal. There are little gaps in E-minis. Meaning there are little possibilities of gaps in the E-minis. Now, there might be gaps in the E-minis because the E-minis trade off the price movement of the S&Ps. So if there's nobody trading for the few minutes and the S&P moves up, yeah, the next trade might have gapped it up. Party City. Whoops. You stay long. However, you've got a bullish engulfing signal in the overbought area. Have a safety stop at the T-line. That may be the last gas buying. There's your shooting star. You can stay long on this 45 degree as long as they don't close it below the T-line. AXNX, no, wouldn't be long. Nothing on this chart. We were going to go long. It just never executed. You can see the double top, and you're below the T-line. Stochastics heading down would be, if I was long, I'd be out, moving my money someplace with better prospects. This one held the T-line. You stay long. Yeah, can't get the I can get the YMs, which is up 71. I don't know what the, let's see. The Qs are up 40 to 80 cents. They closed at 290.10. They're bidding 290.60, asking 290.82. Not enough on this one to give you an analysis. Tesla, you stay long as it stays above the T-line. Crisp, yes, it's too late to buy, and I wouldn't be buying this one. You've had a shooting star in the overbought area. I'd be more apt to be watching to take profits. Nothing here on Suncor. Maybe getting ready to go short on a wave 1, wave 2, going into wave 3. RVLV. Slow uptrend. All you can do is stay long. Obviously watch to see what happens once it gets to the 50. NIO, you can stay long ever since the little best friend signal. INMD, there was a gap up selling. When it started selling in the overbought condition, where do you think it was moving back to? The T-line. If you're long, it has to open positive tomorrow to stay in it. Beyond Meat is nothing great. It closed just below the T-line after the left-right combo. If you're long, it has to open positive tomorrow to stay in it. If it opens lower, close out the position. BKI, Black Knight. You stay long. You're in the overbought area. You put your safety stop someplace where it shouldn't trade, like somewhere right in here. Yep, you're in the overbought area, so keep your safety stop somewhere where it shouldn't trade. Okay. Facebook just is not a great trader right now. That's pretty much flat. I wouldn't be long or short Facebook. Does your chart analysis take into consideration when the gap between the moving averages is big and looks overextended? Yeah, but it doesn't matter where it's happening. If it gaps up, yeah, now I look to see what they're going to do if they created some sort of signal. The reason I ask is in the daily picks as a buy. It shouldn't be there. I mean, it was a daily pick. Remember, not every trade or every stock that we put out is a buy. If we were buying this based upon a positive open J-hook pattern and it opens and immediately trades lower, it's not executing. So just because it was put out there doesn't mean it's going to execute. And that's the whole reason why we train people to do their own scans, because I might put out 3 trades and none of them execute. You don't want to sit there with no ideas. Now you can go back to your own scans and see what other charts look good. You're always going to have a good supply of stocks. Every day I have at least 5, 7, 10 good trade setups. Just a matter of picking out which ones are the best. Yeah, I would give it one more day, but you can see again, it came up through the resistance level, came right back to the resistance level, showed a buy signal. Where do you think everybody's watching for the next target? Up here at the 200. So you could buy this one on positive trading tomorrow. Amazon just barely stayed up above the T-line, so it has to open positive tomorrow to stay in it. If it opens lower, probably want to start closing it out. Oops. HTSC. Nope, that's not working. Okay, so we definitely need to see the markets open positive tomorrow. Looks like the futures are trading up a little bit. But remember, the futures right now do not mean a hill of beans. It's where the futures are about 10 minutes before the market opens. Do you have scan rather going from stock to stock? You have scan. You have scan rather than going from stock to stock? I don't know what that, oh yes. There's some very simple scan techniques. Yeah, you should, if you don't know what you're doing, you can find your best trades in probably less than 20 minutes each day. If you do know what you're doing, you're going to find the best trades in about 7 minutes after the market closes. Duluth looks like wave 1, wave 2, in wave 3. When you could be buying this one, nothing really wrong with it, just not a great place. There is little gaps, yeah, because the E-minis will gap up if nobody's trading the E-minis and the S&P moves, then the next trade may be up higher. Okay. All right. Let's see, take a quick look ahead and look at crude oil today. FL. Crude oil is still trading right around the $41 range. Okay. All right, everybody. Again, we will be doing a 2-day training this Saturday and Sunday. This, using the T-line with the candlestick signals, just dramatically improves your ability to analyze what a price move is doing. So with that, everybody have a good evening. We'll see you bright and early in the chat rooms. We'll see you then.